when President Xi and President Biden meet in San Francisco, the economic fortune of these two countries are very different. United States, buoyed by the strong consumer spending and generous government supplies, has really strong performance. The third quarter GDP notched about 4.9%, and it defied the forecast of a recession. It seems everyone, a lot of people are very surprised about it. And at the same time, China's economy is struggling, especially its housing market is struggling, and has a potential to wind down the economy. So, and also people are worried, talking about, maybe the engine of Beijing's economic growth is downshifting. So today we are very fortunate to have excellent speakers to talk about this issue. Let me introduce MIT Professor Yasheng Huang. Professor Huang is the most sought after voice on China's economy recently. I met Professor Huang in many occasions, listen to his speech on his talk on China economy. He just published his new book, The Rise and Fall of the East. Welcome, Professor.
Thank you.
And Paul Sheard. Paul Sheard is the former chairman of S&P 500. And also, Paul's new book, The Power of Money, is received very well. It's Wall Street Journal bestseller. Welcome, Paul.
Thank you. Good to see you, Susan.
Yeah. And we have Tao Wang. Tao Wang is head of Asia Economic Research in UBS Investment Bank. And also an author, her book, Makes Sense of Chinese Economy, is very well regarded. And Tao Wang is also highly regarded in China hand. So we're very lucky to have these two experts talking about China's economy. So actually, since August, the bad news about Chinese economy is flooding in. We see the consumer spending, the expected strong consumer spending after zero COVID policy did not happen, and the trade tumbled, and the foreign FDI also have this outflow. So if you just read the news, you also have the feeling that the economic storm is coming, but the reality is different. Actually, for me, my personal experience is different. I went back to China this trip during the summer vacation. I went to Shanghai, Beijing, and Luoyang, my hometown. My kids were fascinated by Shanghai's prosperity, and everywhere we went, the restaurants, the tourist spots are packed. It's everywhere. And I remember in Beijing, when I left a very popular restaurant in 10 p.m., still a long line is waiting in the summer night. So my question here, Professor, is this the narrative of the economy, is this true? Although the number is grim, and people are talking also talking about poor economy, but is there a gap between the economic number and the real situation on the ground?
Yeah, thank you, Susan. So by the way, the East in my book stands for exam, autocracy, stability, and technology. So it's not geographic, it is about these four topics. In terms of the gap that you described, we're actually seeing a gap in the United States as well, right? So if you look at the poll numbers, people are feeling very bad about the incumbent administration, President Biden. But then if you look at the numbers, the US numbers are actually quite strong. If you look at employment market, if you look at GDP numbers. So I think, in the history of US economy, Chinese economy, you can have a period of time when the psychological perception and data diverge. Right? So I'm not terribly surprised by what you described, but let me go into some of the possible explanations for that gap. By the way, I defer to the industry experts because they follow these issues more closely than I do. My book begins in the 6th century, so I'm I'm a sort of a high level kind of a person. And so the one possible explanation is that if you look at consumption data, the consumption data are objectively weak, right? So I mean, that's just the fact. So you could have a substitution effect where the young people are spending and the older demographics are saving. And the young people spending, so I did hear about this phenomenon that you described from other people who described to me that the young people in China now are facing very high unemployment. So that's a fact.
More than 20%.
More than 20%. And then they stop publishing the data.
Yeah.
Usually you don't suppress good news, you suppress bad news. So that's going on. And the other is that the people who are currently employed are no longer having the forward positive expectations that they used to have. Many people complain about the work schedule in China, right? And you work from 9 o'clock in the morning to 9 o'clock in the evening, and then all the way from Monday to Saturday. But if you actually go into that psychology, that is actually a sign of optimism, right? Because what you want to do is you want to accumulate wealth, you want to accumulate income flows, and you believe that hard work actually pays off. In the earlier work we did, surveying the rural migrant workers in Guangdong, the overwhelming desire on their part was to work more, And so it's not our culture where we go off to a fishing trip and don't work. The Chinese culture is actually built around hard work. So one explanation is that now even the currently employed young people now have now decided to devote more time to leisure as opposed to work.
Lying flat.
Yeah, so that's a phenomenon in China, lying flat. For both the groups that don't have jobs as well as people who are currently employed. And so for the currently employed group, the way to lie flat is you work less and you do other activities more, right? So we all have 24 hours, so essentially it's a matter of time allocation, shifting from work to leisure. And the other explanation, which is complementary to this, is that increasingly, remember though, the young people you observe in Shanghai restaurants, these are single children generation, right? So essentially now you have, parents, if you're married, you have 4 sets of parents and grandparents, increasingly looking after their children. So essentially you have some sort of transfer of resources from older generation to younger generation, enabling the young people to spend more, but then at the same time you reduce your own expenditure. So the overall effect of the reduction of the older people's spending and the increase of the younger people's spending, the overall effect is still negative on the macro consumption data. So you do see the savings go up substantially last year and also this year. So at the macro level, you don't really see this aggregate big boosting effect. So that has to be explained by these microeconomic dynamics, the substitution of spending by the young people, by the old people in favor of the young people, and the reallocation of time between work and leisure. So again, I don't have any data to explain this, but to the extent I can explain this gap, that would be my way to explain it.
Paul, do you think, does this suggest the economics, the real situation is not as bad as the data suggests?
I think that's right, Susan, and thank you very much for inviting me to this wonderful panel and this session today, and to be at the China Institute. Economists are kind of boring people. We look at the data. And so when you ask a question like that, I look at the data. And just to frame this a little bit, at the moment there are a lot of seminars, there are a lot of people writing op-eds and essays, etc. Essentially making the point on your graph of going down, 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 down. So if you kind of just keyed into that, you would think that China is really kind of doing very, very badly. But it's very interesting to look at the data. Now, of course, this period that we're living at the moment is still in the sort of aftermath or the afterwash of the COVID pandemic. And if you look globally at COVID, and particularly in the first half of 2020 when it hit, we have never seen in recorded history, and unless Yasheng can contradict me for being somebody who looks back centuries and centuries, but certainly in modern history, never seen such a dramatic and large negative hit to economic activity, GDP. And then there was a recovery, and then now we're in the aftermath of that. Now, if you look at China versus, say, the US in that metric, China appears to have come through this whole COVID period very, very well. So, for example, if you looked from the cumulative increase in real GDP from 2019 to 2023, China's real GDP has increased about 20%. In that same period, the US has increased by 7.7% and the Euro area by 3%. Now, let's call it 8% versus 20% over a 4 or 5 year period. It's actually not that surprising because we know that China has inherently a higher potential growth rate than the US. But nonetheless, just looking at the GDP numbers, China's performed very, very well. By the way, if we start with COVID, and again, I don't want to open the COVID can of worms too much. We've all got our...
You already did.
I did. We've all got our traumas, etc. And there's always, whenever you quote data, it begs the question, can you believe the data, etc. But I was tracking the China data and the US data, and particularly the Australian data, where I originally come from, through COVID. And what was startling about China was the very low fatality rate. And if you look at per 100,000 of deaths, if you just got the latest WHO data on this, which is collected from national authorities, in the US, that stands at 344 people per 100,000 died, lost their lives, attributed to COVID. That number in China is something like 8.3. So do the arithmetic, the per capita rate, fatality rate, in the US is 45 times that of China, and yet a lot of the commentary and a lot of the zeitgeist around this is saying zero COVID was such a terrible policy that China implemented. Well, from a public health point of view, it doesn't look too bad, and from an economic point of view, it actually looks pretty good as well. Let me add a couple of other tweaks to the economic story, which is after we had the great collapse in economic activity, we of course had the great stimulus, the fiscal and the monetary stimulus, which, as an economist, I applauded at the time. And we got a recovery, but then we got the great inflation. In this country, consumer price index inflation going to about 9% at one point. What do you get after a great inflation? You get the Fed slamming the brakes on monetary policy, and now we've had interest rates going from around 0 to around 5.25% or so. Again, if you look at China, they didn't actually have the great inflation, and therefore they haven't had the great monetary tightening. In fact, they've had a little bit of monetary loosening. So that's all by way of setting the scene, Susan, for more or less saying, don't believe what you read in the newspaper, don't believe what you hear when you flick the TV on. But coming to the conjuncture at the moment, again, if you look at the data, the IMF just the other day, after Article 4 kind of consultations with China, has actually bumped up its GDP forecast for this year. I think it's now 5.4%.
And IMF number.
Yeah, and they're looking for it to be less next year. And China is facing various headwinds. We can talk about those, I'm sure we will. But big picture, I would say that things look quite good at the moment.
So Tao, you're based in Hong Kong, right?
Yes.
Yeah, so I think you are so close to China, so you know more what's happening on the ground. So do you think, it's still like overly exaggerated to say that China's economy is on the brink of collapse?
I do track China very closely, not because I live close by, but as a profession, I look at not monthly data, but also daily data to track, for example, about lockdowns. Instead of official numbers saying how many cities locked down, I track daily congestion index and passenger turnover. So because some cities will be in quiet lockdown, they don't announce it, right? That's a way to monitor economic activity. To answer your question, I think I would agree that the pessimism about China at the brink of collapse is an exaggeration. However, I would say that China's recovery has been weak and it has been uneven. So I think this feeling depends very much, when as a macroeconomist, you look at the aggregate data. If you start to sample things, depending on your little sample, you'll get very different ideas of, whether China is booming or China is terrible, right? Because it depends on very small sample. So what has been doing well, and your experience about travel and restaurant in China, yes, that is booming. We see airlines and trains being full and restaurants being busy. Partly because that for 3 years, there has been a lot of mobility restrictions and people couldn't go out to eat and couldn't go out to travel, so there's a lot of pent-up demand to be released. And so there's a recovery. But is services, so these are services consumption, are services consumption back to the pre-pandemic trend? Not yet, right? So the growth is very high because you fell very steeply. So the numbers tells you you're great.
But the number
for the
is
people,
not, even this number is not as great as people expect.
no, because people say, yeah, I'm recovering, but compared to my pre-pandemic income, it's less, right? Compared to last year, it's great, but I'm not really recovering to previous. So there's a expectation, there's how you feel and what the data tells. The data has the base effect. And then also, in terms of consumption, China is going through the deepest property downturn in history. And property is the biggest item in household wealth. So people don't feel great. And that's also very understandable. So in terms of goods sales, whether it's appliances, furniture, all those durables, they're not doing great, right? So people are not doing that, but people, migrant workers, we talk about youth unemployment, it's important, but more important to me as an economist is migrant workers, because there's 200 million of them in the labor force, and the youth labor force, excluding those people in schools, are 35 million. So they are big, but not as big as migrant workers. Migrant workers were hit very hard during the pandemic period, and China's low, fertility rate came at a cost where people cannot go out, and they lose their job, and they lose their income, and so on. And so the people who are hit hardest are the migrant workers working in restaurants, delivery, and those kind of things. Now they are coming back. Their jobs are recovering. They are consuming, but they are not consuming expensive things, and they are not in high-end restaurants. So there's very different perception.
Sure, and also the pessimistic about China's economy, a lot of it is related to China's private sector. As we all know that China's economic miracle is based on the market-oriented reform. And the private sector is the engine of China's economy, in the past 40 years. Actually, I interviewed Warren Buffett in 2019, and he told me that he said China already got the secret sauce of success. What's that? It's market-oriented economy. So, but now, I saw data, it's from Pearson Institute for International Economy. The data suggests that since 2015, the fund, the capital flow to private sector is diminishing, where the capital goes to state sector is increasing. Do you think that this related to the difficulty of China's economy?
Well, first of all, that development preceded the
Yeah.
COVID. And actually it began to happen right after Xi Jinping took over the government. You see an immediate change in the credit flows away from the private sector in favor of the SOEs. And that's not good for productivity, right? So if you look at Chinese productivity numbers, I mean, let's be a little bit also be fair to Xi Jinping. The productivity numbers began to go down long before Xi Jinping.
Yeah.
But the things that he did, regulatory crackdowns, credit reallocation in favor of the state sector, and Jeff was talking about geopolitics. We can debate about who started what, but the objective fact is the geopolitical situation has become extremely adverse,
But do you
right, as
think
compared with before.
Do you think the private sector is still the engine of the economy?
No, private sector in terms of GDP contribution, in terms of employment contribution, it is still bigger than the SOE, also in terms of the tax revenue contribution to the. But the thing is, it is a less optimistic private sector. It is a less well-resourced private sector. And also, let's just remember what happened in 2021 and 2022. This across-the-board crackdown, regulatory crackdown on the private sector, going after some high-profile, highly respected private entrepreneurs, right? So in addition to the shock to these companies themselves, there's this additional sort of externality factor, right? These are people that young entrepreneurs look up to and aspire to. Now you knock them down, right? The entire industry was wiped out, the private education industry. And also the way that it happened, just purely political and administrative without going through any due process, that manner with which these crackdowns happened also didn't do much favor in terms of business confidence.
So,
and on COVID, I do want to make this point. The mortality rate may or may not be higher or lower than the United, but that's not the right way to look at it. The zero COVID controls created collateral deaths that are not included in the data on the death because of the COVID-19. And also many of the deaths of COVID-19 happened in December 2022 and January 2023, after the vaccines were already available, invented. And this is fundamentally different from the Western countries that had to suffer through a period because the vaccine was not there, right? And the West didn't really have this kind of administrative capacity to control, to restrict population mobility. So I wouldn't kind of just cite those official mortality data. Future historians have to look at excess death, and we don't have that data now.
So, Paul, let me ask you this. Since China right now, the economic slows, and we know the private sector is kind of depressing, is there a possibility that right now China's economic growth is dependent more, maybe Professor Huang said, private sector still is bigger, but in another term, do you think it's possible that right now economic growth is dependent more on state-owned enterprise and than the private sector, and then that's the reason that economics is got sluggish?
Well, I think so. Big picture. And again, I mentioned the kind of the pessimistic story about China. The common thread is exactly what you said, and also Professor Huang has touched on, which is there has been a decline, or if you might call it a crackdown, you might call it a tightening of the screws on the private sector in China. Again, high-profile cases like Jack Ma, and you've had a decline in the rate of growth of the private sector, which again was the predominant driver. So almost arithmetically now, SOEs are kind of relatively, in that sense, more important. But I think if you ask the question about what does China need to do to continue to grow at 4, 5, 6%, something in that range, over a sustained period, and continue to move up the economic development ladder, I think most economists, most observers of China would say, there has to be a very strong role given to the private sector. And perhaps the time has come, for the pendulum to be swung back a little bit in the other direction. Speaking of Jack Ma, just a little small vignette, I don't know if anybody else in the audience was in the ballroom of the Astoria the Volta for Soria, I think it was 2015, June 2015, from memory, or maybe it was 2014, but Jack Ma gave a speech at the Economic Club of New York, packed ballroom. And I remember, coming out of that lunchtime meeting and thinking, what an incredible asset Jack Ma is to the Communist Party of China. Because he literally, well, perhaps not quite literally, metaphorically had Wall Street eating out of his hand. He was so charismatic, he was so magnetic, but he was telling a sort of a China story as well. So, a kind of private sector entrepreneurialism with Chinese characteristics. So, a few years later when I saw him fall from grace, again, I don't know the backstory or anything else, but it does look like a kind of an own goal from that kind of perspective. But just on the SOEs, there are different kinds of SOEs, and I think just because I'm an economist, economists don't generally hate government-owned enterprises, but in fairness, there are different kinds of SOEs. There are SOEs operating at the provincial level, as opposed to the state national government level. And as I understand it, there's quite a bit of kind of competition between the provinces. So I think we have to look at how these SOEs are actually managed. Are they held at sort of through an ownership relationship, or are they micromanaged by people who really shouldn't be micromanaging the business? Or are they given a lot of leeway? And what sort of competitive environment that they are actually embedded in? But I think, bottom line is, Susan, to sustain its economic development and growth, and I'm talking about another, 10, 20, 30, 40 years here, obviously there needs to be some kind of, Chinese solution to how do you match the Communist Party of China, 95 million people in the Communist Party of China, call them sort of government elites, if you like, or party elites, with this dynamic private sector, entrepreneurial-driven economy. They seem to have got that mix somewhat right for a few years. It seems to have gone sour. They've got to get back on that track somehow.
Tao Wang, what's your view on that? I'm sure you know a lot of private sector elites, in the States, in China. What's that thought?
So just, you mentioned my book, thank you very much. So my book actually look at the state versus the market, right? And so I think Warren Buffett is right that China's success over the last 40 plus years is precisely moving away from the total state control and moving to a market orientation. But I think the rhetoric that China has become more and more state and we're going to that direction is also exaggerated. And if we just read the newspaper coverage, we would imagine since the global financial crisis, which when people talk about 国进民退, the state taking over, and that, so at that period of time, when the export was collapsing, export was very much driven by private sector and foreign companies. When property collapsed and so on, the state put in infrastructure. Yes, it was more state compensating for the lack of private investment and so on. That did happen. 2015, 16, China had a property downturn, and the government again is pushing through deleveraging, and the shadow banking was going wild, and shadow lending was going to private sectors and developers and so on, because indeed the financial system is unfair. They favor the SOEs, and private sector had to go into all kinds of shadow things. And so when they started to worry, when the government started to worry about the risk and start to tighten regulations on shadow banking, on the environmental standards and pollutions, which also again private sector tend not to follow, they are hit harder. They were hit harder. But if you look at the share of private sector, at least in the industrial sector and so on, since 2000, since mid-2000, you can see the glass half full, glass half empty story. Yeah. The glass half full story is that it has not increased. If we read the news headline, we think the state must control so much, but no, in the industrial sector, they're less than a third. But the glass half empty story, of course, is that they ceased to decline. Because in the 90s and so on, they declined, and there was allowing private sector to develop faster and so on. So I think it's not so gloomy. Yes, there are tougher regulations. what we can debate about the necessities of regulations. I think we all agree on the way the regulations came down was not friendly and was quite damaging and so on. But then we should also look at vibrant private sectors that are still growing. I mean, so you mentioned the EV sector.
Yeah.
EV is growing very rapidly. They're driven by private sector, by innovation.
Sure.
And as a share, the more state-controlled automobile sector is declining, right? Because they are not innovative and so on. So I think the lesson from this is that private sector has become the engine and will not go away. They have, more than 80% of the employment is in the private sector, and wherever they have some room to grow, they will grow. Because we have entrepreneurship, you say some people lying flat, but China is still very poor. A lot of people cannot afford to lie flat and still working very hard.
And we have very strong work ethics, right?
We have strong work. So I think, no, I think the state is not taking over. They cannot possibly take over. I agree with my panelists that the state is less efficient, and to channel better growth, they need to give more power and more room for private sector to grow. But I'm also not so pessimistic about the current state or the direction where the government is going to drive policy.
Can I make one more point? Again, this is really kind of very futuristic. But again, I come from a Japan background, so I always tend to look at China through the prism of Japan's experience. And you see some similarities. If you went back to the 1980s, for example, the famous Shinkansen, Japan Railways, it was all owned by the government, the postal service, the postal bank, insurance, NTT, all the telecommunications, even a thing called Japan Tobacco, even the cigarettes all were owned by a government monopoly. And we see similar things in other countries if you go back to the 70s and 80s. And Japan did a massive privatization program. So again, I don't know how the politics and that relationship between the state and the private sector is going to evolve over time, but there is a great opportunity when you look on a long-term perspective in China for publicly owned or publicly controlled assets to be privatized or corporatized in some shape or form. And that's a really, and I'm not saying Xi Jinping's going to wake up tomorrow morning and decide to do this, but at some future administration, there is a huge kind of reform agenda and opportunity there.
Great. So we still have a lot of things to cover. Maybe just 1 minute.
Oh, okay.
1 minute.
So the privatization option has always been there. Actually, the best time to privatize is when the GDP growth is very high, right? Because you get the best valuation and the best offers. And so, but typically governments don't do that. They actually wait, and then the GDP growth slows down, and then they privatize. By the time they privatize, because GDP growth is slowing down, they are actually not reaping the same benefits as they would have before. On the private sector measurement, I do want to sort of comment on Tao's comment. It is true if you go to the official data. I think most people in academia don't really look at the official data that way. If you actually look at the registration data, and there's a large-scale study of millions and millions of Chinese firms, the state equity share of what we normally think as private sector firms has increased dramatically. The issue here is whether or not the state exercises what we call control rights on the basis of the equity shares they have established or not. That we don't know because that requires observational data. So typically when we look at state-private shares of the economy, we don't look at this as a binary categorical variable, state or private. We look at more fine-tuned data, and those data do show a substantial increase of the state shares, equity shares of the Chinese businesses.
Yes, so the picture also is very mixed. So another thing, a negative number is that we just this week, for the first time, FDI in China record a negative number in third quarter is $11.8 billion. So Tao, you worked in the UBS, I just read yesterday that the largest hedge fund, Bridgewater, cut 10 Chinese stocks. How about US? I know your CEO just visited China in September and affirmed its commitment to Chinese market. Is the sentiment changing now?
So our CEO was visited very recently at
Yeah.
the peak of China pessimism. So you
Yeah,
can say
September.
that we are not changing our China strategy. Of course, our business is, involvement in China is mainly investment banking, so we are the brokers. Bridgewater manages their own investment, so I'm not talking about the UBS books and so on. So what we see is China, just looking at the mathematics, if China growth continued to slow, my calculation, my estimate is slow to 3.5% by end of this decade. China will still grow more than 4% a year this decade, contributes to 1/3 of global growth, the largest contributor to global growth. And so it's just, that it's continued to be the second largest capital market in the world, where people are very much underinvested. So do you still want to play in this market or not? And then for many, whether it's FDI, enterprises making stuff, or for investors, if you don't put political pressure on them, I think most people say, I still do want to play in this market. So, I think, I cannot comment on our own strategy, but I think, look at the FDI number. I just wanted to comment on that. There is a structural element and also a cyclical element. The structural element is that there is very serious decoupling pressure and supply chain shifts, and countries that are putting either stick and carrot, trying to push companies out of China for whatever reasons. And this is real. And we of course have tech restrictions, export restrictions. So companies want to de-risk. They don't want to be at odds with their own government or powerful other governments. And so this is happening, and so FDI is part of that. China's economy is slowing, and people are very worried about the long-term sustainability as well. So opportunities have become less, and people are also, that's also another reason, right? So these are long-term reasons, I would say, that will reduce the FDI. But short-term reason is the FDI you mentioned, 11.8 billion, include retained earnings. I would say earnings are down because China's economy is down, and includes private equity. And private equity typically invested in tech, and we just talked about tech being hit very hard. And private equity going into China usually raise fund in dollar. And dollar interest, you know how much it costs. Right now, nobody in their right mind would borrow in dollar and go invest in China. It just doesn't make any sense. Even if you're very optimistic on China, you would raise fund in China, not in the US. So these are some of the cyclical reasons. So I don't think FDI will be just negative from now on. It's just a trend. I think it will bounce back. Another reason I want to say cyclically is also that in the first half of this year, the US-China flights was back to a whopping 10% of the pre-pandemic level. Very difficult for people to travel to China, and after being cut out for 4 years, you feel very iffy about investing in China, right? And so as people start to, communications start to happen between our president, our cabinet members, and businessmen, I think some of the investment will also return. So I'm not so gloomy on that.
Oh, that's great, because today, President Biden said, we don't want to decouple from China. And last week, Janet Yellen and China's Vice President He Lifeng almost agreed that two economies don't decouple and encourage Chinese and American companies to keep the operation, enhance the cooperation in US and China. So do you think the meeting, this message will send to the company, do you think that will help the foreign company to operate in China?
Well,
encourage that.
So there are a number of things going on. One is the politically driven, foreign policy driven decoupling, at least the directional decoupling, if not the complete decoupling. The other is the business environment in China, right? So I think we can generally agree business environment in China today is not as of high quality as it was before. And so essentially some companies move out in part because of foreign policy tensions, but also because of the business environment. But I want to say that there's one form of decoupling that nobody talks about. And as a professor at MIT, I know this very well. Scientific, technological collaborations, venture capital investments from China in the United States, they have virtually come to a stop. Right? So they don't have an immediate impact on the economy because these are really just R&D activities. But a slowdown in these type of collaboration is still going to bring about a lower level of production of knowledge, production of science, production of technology. That will be good for the whole world, but also will be good for China and for the United States. And that's an educational collaborations, tourist visits, and things like that. So we have to look at these other layers of the phenomenon rather than just look at the factories. In terms of the factories, I taught a course on Southeast Asia for the first time at MIT. For the first time, a course on Southeast Asia was created. There were so many students who want to study Southeast Asia, and so many Chinese students who want to study Southeast Asia, because their companies are moving to Vietnam, their companies are moving to Malaysia. If you look at the trade coming from China, export to the United States, the share of the U.S. import, the Chinese share of the U.S. imports since 2018, since the tariff war, has declined by something like 6 to 7%.
You mean import or export?
Well, imports from China, right? But Chinese exports to the United States, as a share of the total U.S. imports from the whole world, has declined by something like 6 to 7%.
But export number, falling very big in July. It's getting, although it's still negative, but it's getting better in August and September.
So here, I think I go back to Tao's comments about cyclical and structural, right? So I'm talking about since 2018, and I don't recall seeing such a dramatic shift in the foreign trade patterns within such a compressed period of time. Of that 6% percentage decline, about 4% went to Canada and Mexico, about 2% went to Vietnam. Vietnamese economy is about $300 billion GDP. 2% of the $3.2 trillion, which is the US imports, is a huge bonus gift to Vietnam. And that's why the factories are running at full capacity in Vietnam. Whether or not they can replace China, I doubt it. But at least there is already ongoing microeconomic decoupling in China, and multinational corporations have a strategy now, which is known as a China Plus strategy. They are going to keep the factories serving the Chinese market in China, but they are gradually going to move factories and productions catering to the rest of the world to some other country.
Yeah, it has, but as you said, a lot of multinationals still keep a big presence in China, like Apple. Like,
sure.
Yeah, so we see the big picture, and we see that there's something changing, within this picture. So another question is the most difficult question for China is actually the housing market. I believe everyone here have, during the past few years, everyone, heard about this recurring prediction of China's housing market bubble burst. So do you think, is this moment finally coming?
It has already come.
It has already come.
Housing starts in China is now running at 35% of the peak level, which was in 2021.
Mm-hmm.
So it has fallen a lot, and housing sales is down more than 40% from the peak. So prices have fallen not by as much.
But do you think the bubble will burst?
So, but what do you mean by bubble burst?
Bottom.
Like things like Japan.
Yeah. So if you ask me, so I would answer in this way, that the peak construction, peak property demand in China is behind us. And they probably overrun a bit. I predicted behind us already, a few years before. And would price, decline a bit? Yeah, I think it would. And would China face, therefore, slower growth? And would property no longer be a major engine of growth for China? Absolutely. So in that case, it's all true. But would it be like Japan in that, would China be like Japan, that growth stuck in 0 to 1% in real terms for 30 years? I don't think so. Mainly because, as Professor Sachs mentioned, China's per capita GDP is less than 20% of US level. Japan was more than 100%, not in PPP terms, but in market price. We can still invest, and there's still people unemployed, we can still grow. So in that way, I don't think we're going to be like Japan.
Paul is an expert on Japan's economy. We're definitely to hear his voices. Do you think China will follow Japan's footstep? You know, the bubble burst and then the last 2 decades.
No. How many questions were there? No. China and Japan, obviously it's an obvious comparison to make, and this debate's been going on for quite a long time now. The so-called bubble in China is and was very different from the bubble in Japan. And the sort of bursting of the bubble and the adjustment process that's going on in China is also very different from what happened in Japan. So the difference is, apart from the level of the stage of economic development, and that's quite important. There was, in Japan, it was an asset price bubble, it was a land price bubble, more so than a construction boom or a residential construction boom per se, as we've seen in China. There was also an equity market boom, and equity prices and land prices, not the price of structures so much as just the land prices, went dramatically up. Again, just to give you a sense of that, from about 1985,
84, 85. I'm talking too much. I've lost my computer.
Thank you. My bubble is deflating. From about 85 to 90, the land prices in Japan went up 4 or 5 times. If you look at price rises in China, I don't know, Tao, what would be off the top of your head, but 20%, 25%, something like that. Land prices nationwide,
Right.
Something like that. So you can't compare them. And then, of course, the collapse in Japan was a massive deflation of land
China
prices.
is just now the
So that's-
October number that the consumer price is about -0.2, but I know it's
Well,
very
now
small.
we're
but-
talking about deflation. I'm talking about the asset price bubble. So it's
Okay.
very, 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 very different. The other point, just again, in terms of stage of development, to realize or to kind of think, to recognize in China's cases, we've been talking for years about how this Chinese economic miracle has brought hundreds of millions of people out of poverty. And, part of the way that was happening was to put them in nice houses in urban areas as urbanization took place. So did China did Chinese property development and residential construction overshoot and get out of hand? Almost certainly it did. Is there going to be an adjustment process around that? Yes, there will be. But it's just a different category from what we saw in Japan.
Can I add to this? I completely agree that China is not Japan, but not so much from the property market perspective. Going back to Tao's point, essentially when Japan hit the ceiling, it hit the ceiling of its potential economic growth, right? So it was about 75% of the US GDP per capita. China is only 25% of US per capita GDP in PPP terms. So essentially China has far more to go as compared with Japan. But that's actually not the most important. The most important, well, that is important, but let me add some other factors. Japan didn't have entrepreneurship in the way that China has. Japan, amazingly, even though it has excellent universities and scientists who won Nobel Prizes, research shows that very little of the Japanese production of frontier knowledge ever translated into commercial development and into product development and into market and new products and new market. Most of the innovations in Japan happen within the companies and typically big companies. China is totally different. China is actually very much like the United States, right? So university collaborations with the entrepreneurship and the cross-border collaborations
And
In
really
Japan, there was
turn
no.
the technology into the industry.
Yeah, so Japan didn't have private equity, didn't have venture capital. SoftBank actually has made more investments outside of Japan than it did within Japan. So Japan has incredibly impressive array of scientific achievements, but for one reason or the other, those were not translated into economic growth. China has the same capacity to do that. But here's the difference between Japan and China. Japan didn't have to deal with an autocrat, right? And so essentially the constraints on Japan were all coming from the economic and demographic side. Whereas in China, I believe China has excellent economic fundamentals, has excellent business fundamentals. Demographics, yeah, there are some issues, but I don't worry about that. The big drag on the Chinese economy is the direction of the Chinese government policy, is the credibility or lack thereof that the regime creates for the business sector, for the entrepreneurs, for the consumers. So I believe China is all about politics. It's not about economics. China has excellent economic fundamentals.
How about China's debt problem? Because that, the thing that with struggling housing market is like China's debt problem. I have some data here that from 1995 to 2022, China's government debt to GDP ratio is increasing from 36.55% to 76.9% in 2022. So some economists, like a few years ago, already said China's debt problem maybe it's a temporal, and also right now it's like the debt increase is surpass economic growth. So the debt cannot generate enough, rapid economic growth. So what do you think? Do you think the debt problem is a serious one? Yeah.
Thank you.
No, again, I'm not particularly concerned about that. One of my book is largely about this topic, so the power of money. But there's a lot of misunderstanding about the whole concept of government debt and what it is and why would it be a problem. And in particular, the normal way of thinking is that people, and you hear this all the time in the political debate in this country, in other countries as well, is that, well, the government has this huge stock of debt, and it's debt, therefore it has to be repaid. In other words, it's called the household debt, or the government debt fallacy, or the household debt fallacy, which means government is treated as if it's like a household or a corporate. You or I, if we take on debt, the premise is we have to repay it. Governments don't, in principle, ever have to repay their debt. That may surprise you. They actually, it's best way to think about the government debt is as a form of money. And money in a fiat currency world doesn't actually have to be repaid. Now I hasten to say, that doesn't mean we don't worry about it. It doesn't mean that, we can have as much government debt as we like. No, Milton Friedman famously pointed out many decades ago now that too much money chasing too few goods and services will cause inflation. So the biggest single reason, Susan, to be worried about the level of debt is that it could be inflationary because there's too much money being printed. But as you pointed out before, China is flirting with deflation.
Yes.
Now, I don't think China is going to go the way of Japan, which was a multi-decade deflation. But it does, in some sense, have that luxury that there seems to be some deflationary forces in the Chinese economy. And just while I've got the microphone, because again, some of you might be scratching your heads and saying this guy must be a crackpot, saying that governments don't need to repay their debt, etc. Everybody talks about debt in terms of percentages. So, for example, the U.S. debt to get to 100% of GDP sounds like terrible. 100%, how can you go more than 100%? Well, Japan's 240%. It blows through that. But that is not the correct unit for talking about debt to GDP ratio, because you're comparing a stock to a flow per period of time. And so that number that you cited, 76%,
Yes.
is actually, essentially it's saying about 8 months the unit is 8 months. In other words, the stock of China's debt is equivalent to about 8 months' flow of GDP goods and services. So one way of thinking about that would be if all of that stock of debt, and remember, the stock of debt is a debt for the government of China, or any government. It's an asset for everybody that holds it. That's the concept of it being essentially purchasing power. If all of that instantaneously were released into consumption, which will not happen, then it would absorb about 8 months worth of GDP. So that's kind of the analytically correct way to think about it, rather than, oh my God, this number's getting bigger and bigger, we're mortgaging the future of our grandchildren.
Yeah. Yes,
So there's one way to think about the government debt, financing of the government debt, the payment, and the default. Well, I think a better way to think about this whole issue is the productivity of the government debt. Right? And in the Chinese context, you see a close correlation between the rising government debt and the reduction of the productivity growth. Essentially, a lot of these government debt has gone into sectors and industries, maybe excess capacity, maybe duplicate projects. And there's a remarkable story that I read somewhere about a local official in China taking a group of foreign academics to visit the local infrastructure project. Right? So a lot of it is funded by either directly government debt or the government-controlled company borrowing from the Chinese banks. And then it's a brand new bridge. So he said, look at this bridge. We built it within 3 weeks or 3 months. They were admiring the bridge until one scholar with very sharp eye said, how come there's no river below it? And then the municipal official didn't miss a beat. He said, oh, don't worry. We already submitted a report, and we got the approval from the provincial government to dig a river below the bridge. So essentially, these activities, these investment activities, boost the current period GDP, but they have absolutely no effect on the future GDP growth, because usually these investment projects should boost the potential GDP growth rate in the future by boosting the productivity of the economy. So that's the harm of the kind of the debt situation that we see, right? In terms of liquidity, in terms of solvency, I agree, but that doesn't mean that there's no real economic cost to this accumulation of the debt.
For me, actually, United States government want to suggest this to China's government that maybe it's better for Chinese government just to hand out money to citizens, to area like what America, what Europe did.
It's called helicopter money.
Yeah, and that will help economic better than building a bridge.
Yes, I think that would be, because you are boosting the consumer income base, right? You're increasing their consumption. And then,
you don't need to build a useless bridge.
It's very important to think about this from the demand side, right? When you boost the consumption of the households are by definition private sector actors. They send the most accurate market signals about what really is needed in the economy. On the supply side, those companies that supply those goods and services are the ones that are most market-driven, right? So it has both the macroeconomic effect of boosting the aggregate consumption. It has the beneficial microeconomic effect of rewarding companies that supply the right goods and services to the household.
Sure. Actually, in the past 30, 40 years, China is used to 8% GDP growth. But I'm thinking that most people will see that this kind of high growth will not exist anymore. Maybe in the future, the slower growth will be in the horizon. So I will ask each of the speakers, so what do you think, what's the future driver of China's economic growth? Professor, you first.
I just have to repeat what I said. It's about politics.
Close to the mic, please.
It's about politics, right? So Clinton said it's economy stupid. I would say in the Chinese context, it's politics stupid. And I'm encouraged to see the improvement of the sentiment about U.S.-China relations, I believe that this is the first step, that we're coming back to some economic common sense. The U.S. economy, the European economy, you can talk about Russia the way, whatever way you want. The size of the Russian economy is $2 trillion, slightly larger than Guangdong. Right? You can increase your trade by 6%, 60%, 50%, 70%, all the way you want with Russia. It's not going to solve your economic problems. You can also talk about EVs and those, that's 6 or 7% of the GDP, right? Property is 25% of the GDP. You just have to come down to economic rationality. And economic rationality requires repairing the relationship with the West.
How about, what do you think, what's the driver of future China's economic growth?
Well, economists, Susan, as you know, have a boring little thing called growth accounting, which is you can decompose potential growth. And we're really talking here about what is China's potential growth. How fast can it grow without triggering runaway inflation, for example, and without overusing resources. And growth comes either from one of three places. One is using more labor. Well, China is facing demographic headwinds, so that's not going to be, per se, a very important help to Chinese growth. It will actually be a headwind. Second is using more capital. So China has had a very high rate of investment. It has accumulated a lot of capital. But that will tend to go with population as well. The more people you have, the more they're going to save, the more the resources are available for investment. But the third one is productivity, technological innovation, sometimes called total factor productivity. And that's really the secret sauce. And so you can get some of that by relocating, for example, workers off the farms into the urban areas, taking them into factories, for example, combining them with capital and with technology, the same people. But I think it has to be, over the longer term, continued productivity growth. I mean, I think everybody, economists will tell you that. So I think what Professor Huang is saying, the politics has to help to drive that. That's going to be the important thing. But I think when you come back to this point that on a PPP basis, purchasing power parity basis, China per capita GDP is around about a quarter of the US. It has some very kind of well-off, wealthy urban consumers, and they look indistinguishable from people that are touring the streets of Ginza in Tokyo. But you have, Tao mentioned before, a couple of 100 million migrant workers. If we talked about migrant workers in this country, we'd be talking about people coming across the southern border, perhaps. You're talking about workers in China who move from the rural areas. So I think there's still tremendous opportunities for China to just, in some sense, modernize from within and spread the fruits of being close to the technological frontier now and having very high capability of very high incomes, spreading that across the population. And there are still hundreds of millions of people in China who can be brought into a wealthier and more prosperous state of living, standard of living. So it's easy to say we need reform, we need productivity improvement, but that's the way that I kind of conceptualize this. Still a lot of people who can get on that economic development train.
With that saying that, how do you believe that in the future China's economic growth will be a little bit slower? Or do you think the Euro 8% GDP is still possible?
8% is not possible anymore, and that train has long sailed. And so last decade, the average growth in China was 7%. The previous 3 decades was 10%. And so we have already come down a ladder. So this decade, my prediction is between 4 and 4.5%. So it's another level down. There are various estimates to say if China just did everything right, then we can get to 7%. I think they're not doing the mathematics. You cannot just do wishful thinking, including structural reforms. By the way, some structural reforms are painful, are not growth, conducive. For example, China's Wild West kind of growth meant it's very energy intensive, resource intensive, and drove up inequality, degraded environment, and took on a lot of debt. All of those are not sustainable. If you drive that to cleaner development and less debt intensive, growth will slow. So I think that that's just the reality. In terms of the source of growth, I very much share what Paul just said. I think China's productivity level is still very low, but here I'm not talking about TFB, I'm talking about labor productivity. That means you can still invest in mature technologies. You can invest in, you don't have to be completely innovating in the cutting edge, nor you have to build the bridges to nowhere or bridges that you have to dig a river. I'm sure there are ways, but by and large, I think China's infrastructure investment are still mostly productive and productivity enhancing. But I agree that allocation of debt is very important. I think more needs to be in productive sectors and probably private sector rather than SOEs and property developers and so on. Just to add on the debt issue, how much debt you can take depends on how much debt you can finance. If you have to finance with foreign money, then you often get into financial crisis, like Argentina and so on. And if you can print your money, like the US, and everybody will still hold your currency, then there's no limit. But I think China and Japan are somewhat unique in that they rely on their own financing, and there's very high savings. They're all domestic. So therefore, from that perspective, it's not a,
China still have a huge foreign reserve.
Foreign reserve means that China has a saving versus the rest of the world. And China's domestic saving, like household, corporate, and everything is still very high. So in that case, I think I would agree, it's really about how you allocate the debt. It's not about the level. You need to make the debt sustainable. If you continue to put things as non-productive, yes, as a share of GDP, it's not the right measure, but how much production are you producing to help you pay the debt? If your debt payment is more than your GDP, the payment issue, not the debt stock, that's a problem.
Great. So even China cannot grow at 8% like before. I think it's still natural. After 30 years high growth, it's natural for a country to go to 4 or 5% growth. And now, after today talking, I think we have some conclusion that China's economy will not collapse. And China will not become Japan, will not have lost 2 decades or so. But China will have slower growth, which is not bad. So now we are open to the questions. Alex.
Thank you so much for all the speakers today. I want to raise 2 questions from a reporter friend who's not here today. And the first question goes to Professor Yasheng Huang. What role do you think AI plays in the global economic recovery process, especially now when the geopolitical situation is becoming more complicated?
What role? I didn't hear that.
What role do you think APAC plays in the global economic process now that the geopolitical situation is becoming more complicated?
Yeah, so I hope that the summit is going to make geopolitics less complicated, right? And I think, Jeffrey Sachs was talking about the hardline U.S. intellectuals, but let's remember there are also hardline Chinese policymakers and Chinese policy intellectuals as well. I think it's time for both sides to recognize that that the economic engagements they have had have been the most successful joint venture. New York Times recently had a long article about that. It's really history's most successful economic joint venture ever, right? And then in the piece, I told the reporter that it is like in a perfect political world, the 2 countries are completely complementary with each other, but they got married without knowing each other's religions, right? And now they're finding out that. So, but I think it requires some repair, and I believe that I agree with Jeffrey Sachs when he criticized the Biden administration, Trump for sure, right? But we don't really need to single out Trump because everything he does is terrible. But in terms of Biden, I do believe that they should have walked down from the rhetoric from the Trump administration at the beginning of the Biden administration. And the strategy I would have advocated will be that you lower the rhetoric, you, for example, by getting rid of the tariffs, or at least substantial part of it, and then to see if the other side cooperates. If the other side cooperates, you cooperate even more, right? This is called the tit for tat strategy, which has been the single most successful strategy in terms of creating cooperation. Instead, they didn't do that, right? They went in the opposite direction. They increased their rhetoric, and now they recognize that if they don't handle the relationship well, you can end up in an accidental war, right? And that has injected the rationality. So I am very encouraged by the fact that the summit has taken place or is about to take place. Whether or not it's going to mark a fundamental shift in the relationship, I don't know, but at least at the beginning of the process, you need to talk to each other. Historically speaking, an improvement of the US-China relationship has always translated into a better political environment in China, within China, better economic environment within China. Going back even to 1972, when President Nixon visited China, it immediately translated into an improvement of the political environment within China, even under Mao Zedong, right? So I'm very heartened by this, and I hope that the geopolitical tensions are going to go down.
Thank you very much for your thorough answer. And the second question goes to Mr. Paul Sheard, and the question is, how do you see the importance of globalization in the current environment?
Well, I think it is, again, any card-carrying economist will support globalization as typically understood, which is free flow of goods and services, of ideas, of capital, etc. Obviously, every country has its own national interests. We live in a very messy and complex world. But if we interpret globalization in the sense of everybody trading and transacting with one another, that is welfare enhancing for everybody concerned. So really just repeating the point made by Professor Sachs. But just apropos, we've heard about this decoupling argument, which would be, if you really had this decoupling between China and the US, that would be a severe blow to globalization. It is interesting and heartening that apparently both President Xi and President Biden are repeating that line that we heard a couple of weeks ago from Vice Premier Huang and Vice Premier Huang and Janet Yellen, that we are not going to decouple. And that's very important because if you look at the, China and the US are two gorillas in the room. They're the giant economies. The third one is way behind. And if you look at the trade, even with the frictions that we've had between the two, particularly for China, US is massively important. But even for the US, China is very important as well. About number third export destination, as well as being important on the imports, very important on the import side, obviously. So it's almost impossible for you can talk about decoupling or the end of globalization as a kind of political rhetoric, or even for some people an aspiration. But the reality, given the interdependencies, particularly between US and China, is that it's really not realistic. And I think it looks like some of the politicians are starting to internalize that message.
Yeah, given the importance of consumer confidence in China, and given that it's been shaken by the abruptness of zero COVID disappearing and the lingering property problems, what advice would you give to the government in terms of how to win back consumer confidence?
So are you looking at everybody, or are you looking at me? How do you want to take that?
I can take that. I would say give people income and consumption subsidies, because household balance sheet was hurt, not just by the disappearance of zero COVID, by zero COVID itself, right? And jobs was hurt and so on. So that's one. Two is build up better social safety net, including healthcare, especially. I think everybody thinks the U.S. healthcare system is bad, I think China is much worse in that sense. It's a combination of, you have to wait and you have access and the market price. And so, so people feel very insecure about their future. They have high savings. And so pension, hukou reform, these are long-term. They are not going to immediately make people want to spend, but it's going to be fundamentally make people feel better for their long-term and they reduce their saving. Thirdly, I would say then support the private sector because they are the largest employers and also stabilize the property market. Even though I think there is a strong debate in China, believe they are the bad guys, there's too much bubble, too much debt, and we need to let the transition take place. A bit like, during global financial crisis, people criticize the US government for saving the financial institutions, but sometimes you have to do what's feasible because you don't want overshooting and the collapse of certain things. And so those would be the 4 things I would advise.
Yeah, thank you. I believe my question will go to Professor Huang. Do you anticipate that China will continue reduce its holdings of U.S. treasuries, and how this would have impact on the U.S. Economy and yeah?
Well, it's pretty hard even to get the data on exactly how much treasuries that China is holding. The difficulty with they could reduce treasuries, but they have to go into another dollar asset unless they were prepared to intervene in an exchange rate, for example. So the foreign exchange reserves, China has accumulated those foreign exchange reserves because consistently intervening in the foreign exchange market to hold the value of the renminbi down. So this idea of, well, why don't we just use them for something else? They're a product of foreign exchange intervention, so they will have ramifications for that issue. So it's sort of easier said than done.
I think I agree. I think if you don't know, you look at the official TIC from the Treasury data, you see the reduction, but that's only a portion of the US, China's holding. But the biggest question, so on one hand, China's reserves are not increasing, they're declining. So by default, they have to cut something. And US Treasury is the most liquid asset in the world. So, and it's also the deepest pool. So if you don't hold US Treasury, what else do you hold? And there's just nothing big enough for that. So I don't think that China is moving into other assets in any significant way. That's number one. Number two, does it matter for the US? No, it does not, because most US treasuries are held by US. And if US household doesn't want to hold it, the Fed can print the money and buy it. So, during the trade war and so on, people said China has this option, a nuclear option to dump US treasury. I said, yeah, what does that do? You affect the market for 2 days and then nothing happens, right? So it's not really a credible threat in my view. And that's one of the largest China's foreign assets. If you dump it, you are going to suffer a lot of loss, right? So I don't think that's really that direction.
A topic of discussion that probably is a separate program, but no one has talked about the impact of the Belt and Road Initiative. And of course, China has taken a lot of debt. It's willing to take these loans and forgive some of these loans. But obviously, they have a long-term objective. So I wanted to get some insight from the panel about the Belt and Road and its impact on the economy, China's economy for now and for the future.
Well, I would just, I think Belt and Road Initiative, fits into, a pattern that we saw, I guess, beginning around about when Xi Jinping came in, 2012-ish, I guess, when China, was going through this phase of starting to, project or its soft power, if you like to call it that, globally, to start to it had grown so much domestically that I think the thought process was we can start to do things internationally, looking at what America in particular had done, And so it was not just Belt and Road Initiative, but the setting up of the Asia Infrastructure Investment Bank, the new BRICS Bank, getting a very important development, symbolically if nothing else, was succeeding in getting the renminbi into the IMF SDR basket. Sorry, that's all gobbledygook, but essentially getting the renminbi essentially recognized by the IMF as one of the 5 premier reserve currencies in the world. So, there's a lot of debate about, Belt and Road Initiative, but the idea of building infrastructure, developing infrastructure that would facilitate trade and investment links and people flow from what by 2014, as Jeffrey Sachs pointed out earlier, had in PPP terms, and this is the way that economists usually measure these things, purchasing power parity. China became the largest economy in the world on that measure, the favorite measure of economists, in 2014. So in my mind, when I saw these things happening, including the Belt and Road Initiative, it's, were the mistakes made? Yes, surely there were, but it was in some sense quite a natural strategy for China to adapt, to adopt in terms of exercising some, soft and hard power.
Yeah, so I think I see it more as a hard power than soft power. And the best soft power China has is that for the past 30 years, it has established a supply chain that is reliable, that is efficient, that is trustworthy. And anything that you do, through tariff wars, the disruption of trade and geopolitics, anything that you do that damages that supply chain is actually damaging China's soft power. If you look at the polls of China, not just in the United States, but across a number of countries, the favorability rating of China has declined across the board, not just in the United States. It's true in Australia, it's true in Europe. I think it's also true even among some of the Belt and Road countries as well. Although the level of favorability is higher in developing countries than it is for developed countries, but from that high level, it has declined. So I actually don't see Belt and Road as having achieved the soft power effect. And I don't even think it's really necessary for China to spend $1 trillion in order to have some percentage point bump in the public opinion poll. I think in the end, it's going to come back to economics. Are those projects going to deliver the kind of returns, both financially and economically, or not? And the history of some of these countries is such that no matter what the amount of foreign aid that goes to them, they don't generate GDP growth. And that's the whole idea of the World Bank, MF, and international organizations coming up with standards, governance, right? And Belt and Road, at least at the beginning, was not going to go down that path. But interestingly, if you read some of the discussions about Chinese Belt and Road projects and programs, Chinese are beginning to complain about corruption. They're beginning to complain about the capriciousness of the government in some of these countries, right? And then having to bail them out. In the end, I also think that it is based on at least not a complete understanding of economic growth process. There is a strong belief that infrastructure contributes to economic growth. I agree with that. But there's a difference between saying that infrastructure contributes to economic growth and infrastructure jumpstart economic growth. These are totally two different statements. Infrastructure contributes to economic growth, but infrastructure doesn't necessarily jumpstart economic growth. China started out with very poor infrastructure, and then private sector developed, liberalization happened, trade began to expand, and then the government accumulated resources to invest in infrastructure, which in turn reinforced the economic growth momentum, right? The problem with some of the Belt and Road countries is that they have very low human capital levels. Like if you look at Pakistan, if you look terrible public health indicators, usually it is those indicators that predict more reliably future economic growth. So no matter how much money you throw at them, you're not going to get the growth. If you don't get the growth, you don't get the financial return. And then in the end, it is going to be the Chinese banks that kind of have to write off some of these loans. And then it's going to be the savers of the China who are going to bear the eventual cost of some of these decisions. Again, we don't know much. There are probably good projects, there are some bad projects, but I think China is learning. So the discussion now that we hear from China is very, very different from 10 years ago. Very, very more cautious, more calibrated as compared with the discussions before. This kind of triumphal proclamation of Chinese power, I don't hear those things anymore.
So one last question.
My question is related with Biden and Xi summit this afternoon, and this goes to all the speakers. And so both of the leaders, they emphasize a lot about cooperation. And I was wondering if any of you would see this as a turning point to a better economic collaboration between between these two countries, and what this summit will bring to the whole world. And also, both leaders emphasize a lot about they are responsible for human progress. And that's also why I was wondering, do you see this is influencing the whole world?
Only if a summit can solve all the problems, that would be great. I think it's very good they meet and they are making those statements. I do hope it's a turning point, but I'm a little bit wary because the U.S. is entering an election cycle, and I feel that rhetoric will worsen. So I don't know. I'm hopeful, but I'm not that optimistic that one meeting and suddenly things turn. I mean, they had a meeting in Bali last year, and things did not turn because a balloon happened. Something like that could derail the whole thing. In China, the slogan, the official slogan is "Return to Bali." I think their aspiration is not very high. Let's get back to talking to each other and not, have the U.S.-China relationship go down and down and down. Let's have a floor. Let's have some guardrails. I think that's the aspiration. And on that basis, I think if the sides talk, businesses can go back in a more normal. That would be great.
When we look at a summit like this between the two presidents of the two biggest economies and the two most powerful economies in the world, nations in the world, they're different kind of presidents. President Xi exists in a political structure. Some people would call him an autocrat. I think you've heard that, implied that before, Yasheng?
I will say it.
Say it, okay.
Not just imply.
President Biden, but that implies, if he's an autocrat or whatever he happens to be, top of this pyramid of this 95 million Communist Party of China apparatus, he's operating within a particular political system, and presumably he has a lot of power in that political system. On the other hand, we can all agree, I think, that President Biden is not an autocrat. He exists in a particular, very sui generis American system of governance, separation of powers, etc. And so there's much, there's an asymmetry in some sense between what each president can actually say to the other in terms of saying, got it, hearing you, I'm going to now do something different, because particularly President Biden, doesn't call all the shots in the American political system.
I think we need to give President Biden some credit here, right? So, I live in D.C. now this year, and the rhetoric, Republicans and Democrats on China, is extremely negative, right? And now we have an election coming up. Against that overwhelming negative sentiment, the administration has taken the responsible steps toward repairing the relationship with China. They deserve some credits, for one. For the other, returning to Bali, yes, the balloon happened, but balloon didn't permanently destroy the relationship, right? The Secretary Blinken decided to go to China, Janet Yellen decided to go, with a delay, right? So balloon essentially, so just imagine without a Bali summit, and then the balloon happened. The result could have been very, very different, right? So I do believe, whether it's a turning point, I don't know, but in the Chinese political system, it matters a lot that the person at the very top has met with the President of the United States, has said those things that you just quoted, right? Cooperation and how important the United States is to China. Chinese media has changed its rhetoric about the United States. I think these are highly significant developments, right? And the thing is, it's a relationship between countries, but it's also a relationship between two married people. You want to build resilience into the relationship so that when the future shock happens, the relationship does not break down completely. So I believe that the two countries are beginning to build some resilience into the relationship. And that's far better than it was 2 years ago.
Yes, at least to communicate. As long as you communicate, you can get things better. So let's give a round of applause.